So basically, we are doing October, November 2023, paper 21. Okay.
Yeah.
Question number 2. Can you read the question, please?
Explain one difference between a capital reserve and a revenue reserve.
So what is the difference between a capital reserve and a revenue reserve?
So revenue reserves are created by transferring an amount from profit for the year, and capital reserves, like, they represent the gain that comes from like a certain event or something.
Capital reserves are created because of non-trading activities.
Okay.
Okay, they are not the trading activities that happen place. They are the non-trading activities, reserves created because of non-trading activities. And revenue reserves are created by transferring from the profits. Please learn it. I'm waiting. Capital
Okay.
reserves are created because of non-trading activities, and revenue reserves are created by transfer from profits. Okay. I'm keeping the MS open because my Apple Pencil is not working.
Hmm.
Come on, go to the next part. Read the question of the next part.
The directors of Q Limited provided the following information for the year ended 30th June 2023.
Hmm.
Then the balances are given of share capital, share premium, revaluation reserve, retained earnings, total equity,
The
and the
balances are given on which date?
The first date.
Okay, so what will you do?
First, I'll put balance at July 1st, 2022
Hmm.
in SOCE.
Hmm.
So 30,000, 4,500, 6,000, and 50,240.
This is for the retained earnings.
Yeah.
Your total equity. What do you mean by your total equity?
If you add all of them, you'll get that answer.
Okay, if you add all of them, you get that. Okay, fine. Will debentures come in your SOCE?
No, the
No.
benches will come in this thing, the income statement.
Okay, very good. Now go ahead. Go
Then
ahead.
it said on 1st August 2022 made a bonus issue of one ordinary share for every 6 shares held. The directors maintain the reserves in the most flexible form.
Can you tell me the meaning of maintaining reserves in the most flexible form?
So if there's like not enough in share premium, you'll minus it from either general reserves or retained earnings.
So first you will use capital reserves.
Yeah.
So what is the thing for bonus issue?
So it is
One share
for every 6 held.
for every 6 held.
So 30,000,
So what is the number of shares that is held with you?
30,000.
So you have 30,000. 30,000 is the number of shares held with you?
Yeah, and then you divide it by 0.5.
So shares held is how much? 30,000 divided by 0.5. So it becomes how much?
60,000.
So you have 60,000 shares held.
Hmm.
So what will be your bonus?
Bonus will be 60,000 only, no? Then you'll, no.
No,
Then
no,
you'll
no,
multiply it.
no. How will you give bonus? One for every six held.
Yeah, so into
Six,
1 upon 6.
yeah, 60,000 into 1 divided by 6. So your bonus issue would be how much?
It'll be 10,000.
Your bonus issue would be 10,000 shares. What is the face value?
0 point, no, you'll do it as 0.5 only.
You will do
So
it
then you
at
multiply it.
0.5. So multiply. So what will be your bonus issue?
5,000.
5,000. Reserves are maintained in the most flexible form. So which reserves you will use first?
So first you'll use share premium.
First you will use share premium, but you have only 4,500 in your share premium.
So you'll minus that much, and then you'll minus 500 from retained earnings.
So you will minus 500 from retained earnings. Yes.
Yeah, and then
Okay,
do
so for 5,000 you will increase in your share capital. 4,500 you will minus from share premium, and 500 you will minus from retained earnings. There will be nothing that will go in the total. Yes?
yeah,
Okay. Paid final dividend.
paid final dividend of 0.04 per share on all shares in issue at that date. You'll do
Okay. So what are the shares issue at that date?
35,000.
So into 0.04. No, on all the shares. What are the number of shares on that date, dear? You have 35,000 as your capital.
Oh, okay.
So if you want to find the number of shares, what will you do?
35,000 divided by 0.5.
Yeah, divided by 0.50. So 35,000 divided by 0.50 is 70,000 shares.
And then you'll multiply that by 0.05.
So 35,000 divided by 0.50. So you have 70,000 shares into 0.04.
Yeah, form. So
Is
it'll
it
be
possible to give final dividend on all the shares? Because final dividend you always give for the last year. But here, because they have told us that you give on all the shares, so you will give on all the shares. Am I clear?
okay.
Okay. So it comes up to how much?
2,800.
So 2,800 will be the dividend. Dividend is given out of,
The retained earnings.
so it is given out of the retained earnings. So it will go from the retained earnings and it will go from the total. Are you with me?
Yeah.
Now made right issue. What is right issue?
Right issue is basically when you sell shares to like the people from your existing something like that. So you're not supposed to minus it, you're only supposed to add it to the share capital.
Right issues is the share that is not given free of cost. You take a
Yeah.
charge from your shareholders,
Yeah,
but
and bonus
it
is
is
given free of
given
cost.
at a price.
Yeah, it's given at a premium.
Yeah, it can, whatever price is
Yeah.
given.
Yeah, okay.
So what is your right issue?
So it'll
2
be
shares for every 7 held. Yeah.
yeah.
So what is the number of shares held?
Currently it's you'll do 35,000 into divided by
Divided by,
0.5.
yeah,
Then you'll do into 2 upon
1
7.
minute. Wait, what is the number of shares held?
Wait, then 30,000 divided by 0.5. 60,000.
70,000 shares. What are you telling?
60,000. 30,000 divided by 0.5 is 60.
Please read.
Okay. Okay.
How many shares is held with you?
Now 70,000.
Yes. So right issue will be how much?
You'll multiply it by
Multiplied by 7 multiplied by 70,000.
7. Yeah.
So how many thousand shares?
20,000.
So you will give 20,000 shares as right issue. Are you with me?
Yeah.
Okay. What is the
But you,
amount that will go in the capital?
but you have to multiply it with 0.6 also,
1
right?
minute, wait.
Okay.
20,000 shares you are given as right issue.
Hmm.
What is the amount that will go in the capital?
Oh, 0.50.
0.50. So 20,000 shares multiplied by 0.50. This is the amount that will go in the capital. So how much?
10,000.
So 10,000 will go in the share capital. Are you with me?
Yeah.
But you are issuing the shares at what?
0.65.
0.65. If 0.50 is the capital, then what is the premium?
0.15.
Hmm?
0.15 into 70,000.
Okay. So share premium. How much it is?
10,500.
How much?
No, sorry, 3,000.
Okay. $3,000 will go in the share premium. Are you with me? Come on. Paid interim dividend.
So you'll add all the
Number of
shares.
shares. So up till here you had how many shares? 70,000
Yeah.
and more 20,000 shares,
Mm.
90,000 shares
Yeah, so 90,000 into 0.02.
into 0.02. So interim dividend is how much?
1,800.
1,800. You pay from the retained earnings and it will go from the total. Land was revalued at 17,000, 75,000. So what was the valuation of land? What was the valuation of land?
The valuation was 86,000.
Okay, it is now revalued at how much?
75,000.
Hmm?
75,000.
Okay, so it is now revalued at 75,000. So what is the difference? What is the
11,000.
revaluation loss? 11,000. So you have a revaluation loss of 11,000. So from where will you deduct this loss?
From the revaluation reserve. But there's
Okay.
only 6,000 there.
Okay, so remaining 5,000 you will remove from retained earnings. Yeah?
Yeah, so first I'll minus 6,000 from revaluation reserve and then 5,000 from retained.
From the total you will minus how much?
11,000.
11,000. Very good. Can you give me the journal entry to revalue this land?
Wait. Journal entry to revalue the land.
Yeah. What is the journal entry?
Wait.
Land value is going up or going down?
It's going up. It's going down. It's going down by 11,000.
So land will be debit or credit?
Credit.
Land will be credit. So what will be debit?
The bank.
Is the money coming in?
No, it's going out.
Money is going out.
No, there's nothing going out. It's being depreciated.
So what did you use to reduce the value of the land?
Revaluation reserve.
So you used your profits, right?
Yeah.
You reduced your profits
Yeah.
and by debiting it.
Yeah.
So what is a journal entry?
So it'll be profit debited and
Which profit did you debit?
retained profit.
Only retained profit you debited.
So revaluation reserve also.
So the entry will be revaluation reserve, debit how much?
6,000.
And
Retained profit. Debit.
retained profits, you can't even read the name properly.
Sorry, retained earnings.
Retained earnings debit how much?
5,000.
What will be credited?
The land.
Land value is going on. What is wrong with you?
It's land only.
Yeah, but what is wrong with you? Why are you taking so much of time? Profit for the year. Where will it go?
In the retained earnings, 43,600.
and
Total.
in the total. So this you complete your statement of changes in equity. After you complete your statement of changes in equity, you will do your total on the last date.
Yeah.
So you will just add the total and this will become your equity. What is your new equity? Can you tell me now?
Yeah, I'll tell you exactly calculated. So the first one is 45,000.
Hmm.
Second one is 3,000. Third one is nothing.
What is first one, second one? I don't understand.
Okay, share capital is 45,000. Share premium is 3,000. Revaluation reserve is nothing. Then retained earnings is
83,740. So you add all of this and you will get 131,740. This is your new equity.
yeah.
Are you with me?
Yes.
Okay, fine. Read the next question.
The directors of Q Limited have plans to expand the business at a total cost of 54,000 and are considering two options to raise finance.
Okay, they
Option
want
one
to
is,
expand the business
yeah.
and they want to raise finance.
Hmm.
What is option one?
Make a rights issue of 4 ordinary shares for every 5 shares held at a price of $0.75 per share.
Okay, option two.
Issue 10% debentures of 54,000.
Okay, you can either raise the finance from issuing shares, that means own capital,
Hmm.
or loan capital.
Hmm.
Whenever two options are given and they ask you to choose, what do you do?
You write advantage, disadvantage of both, and then in conclusion you choose one, and then you write why that you use.
If you choose right issue,
Hmm.
what is the 3 points for right issue, 3 points for debentures?
Yeah, so right issue is a permanent source of capital. What does it mean by dividend payment is discretionary?
Right issue is an issue where these are like equity shares.
Hmm.
But the equity shares do not get dividend when there is no profits.
Okay.
Okay. So dividend can be paid, cannot be paid. But for preference shares, you have to definitely pay dividend.
Okay.
Okay. So
Hmm.
for the right issue, first advantage is that it's permanent source of capital and dividend cannot be paid. It depends.
Hmm.
But the disadvantage is that you do not know whether it will be fully subscribed or no, because now you're charging more premium.
Hmm.
Okay.
Yeah.
Option two is 10%
Debenture.
debentures.
Yeah.
Okay. If you issue debentures, what is the advantage, disadvantage?
They won't have to be repaid.
They won't have to be repaid.
No, they have to be repaid, so that'll be a disadvantage.
Yeah. Interest
Then
will have to be paid whether there is profit or loss. You will require security and you also have current debentures of how much? 40,000,
40,000.
which has to be repaid in 2024.
Hmm.
So what do you think?
And then if you take another debenture, you'll have to pay the interest and also have to repay that also then.
So what is your advice?
To take rights issue.
So you advise the directors of Q Limited that they should do right issue because it is a permanent source of capital. However,
Hmm.
if they do not have cash flow problem, they can also choose to issue debentures.
Okay.
Okay. So
Yeah.
with this, I think we complete question number 2 of October-November 2023 paper 21.